Household financial confidence has fallen again in January, according to our surveys, so we review the results. Hi, I'm Martin North, Principal Analyst at Digital Finance Analytics. We've just released the January 2018 update of our Household Financial Confidence Index, which uses data from our rolling 52,000 household surveys. The news is not good, with a further fall in the composite index to 95.1, compared with 95.7 last month. This is below the neutral setting and is the 8th consecutive monthly fall below 100. This result highlights the ongoing disconnect between business confidence and findings from broader consumer research, when compared with the real frontline experience of households who are still reeling from rising costs of living, flat incomes, and high debt. By way of background, these results are derived from our household surveys, averaged across Australia. We have 52,000 households in our sample at any one time. We include detailed questions covering various aspects of a household's financial footprint. The index measures how households are feeling about their financial health. To calculate the index, we ask questions which cover a number of different dimensions. We start by asking households how confident they are feeling about their job security, whether their real income has risen or fallen in the past year, their view on their costs of living over the same period, whether they have increased their loans and other outstanding debts, including credit cards, and whether they are saving more than last year. Finally, we ask about their overall change in net worth over the past 12 months. By net worth, we mean assets less outstanding debts. And so to the findings in detail. Across the age bands, there was a small rise in those older than 50 years, but younger households from 20 up through to 50 all continue to track lower. There was a significant drop in confidence in Victoria, which has now been overtaken again by New South Wales as the most confident state. Confidence fell in South Australia and Queensland, whilst there was little change in Western Australia, which had recovered somewhat earlier in the year. Households' property footprint impacts confidence levels significantly, with those who are not property active and so living in rented accommodation sitting significantly below those who own property. Owner-occupied property holders saw a small uplift this month, reflecting the lower refinancing rates available and more first-time buyers coming into the market. However, property investors, traditionally the more bullish, continue to languish, dragging the whole index lower. The segmental scorecard shows that whilst job security rose a little, pressure from large levels of debt rose further, with 44% of households less comfortable than a year ago and only 3% more comfortable. Pressure on savings continues, with lower returns on deposits and more households are dipping into savings to pay the bills. 46% of households were less comfortable with their savings compared with a year ago, and 4% only were more comfortable. Lower returns on deposits also did not help. Cost of living pressures are very real, with 73% of households recording a rise, up 1.5% from last month, and only 3% fall in their living costs. A litany of costs from school fees, childcare, fuel, electricity, and rates all hit home. On the other hand, only 1% of households recorded a real rise in incomes, compared with a year ago, while 50% said that real incomes had been eroded and 45% saw no change. More evidence that incomes are rising more slowly than costs. Those employed in the private sector are particularly hard hit, with many recording no pay rise at all for at least the past 2 years. Finally, household net worth is under pressure for some, as property prices slide and savings are being eroded, and that's despite high stock market prices. While 58% said wealth had improved, 15% recorded a fall, and 23% said there was no change. A further fall in property prices was the overwhelming concern of those holding real estate, with more than half now expecting a fall in the months ahead. This expectation is already impacting their spending patterns and have reduced the prospect of them buying more property. So overall, we see an ongoing slide in household financial confidence, and there is nothing on the horizon which is likely to change this momentum. We expect wage growth to remain contained and home prices to slide while cost of living pressures continue to grow. We will update the results again next month. If you found this useful, do like the post, add a comment, and subscribe to receive future updates. I'm Martin North, Principal at Digital Finance Analytics. Many thanks for taking the time to watch.